You see the markets today? Boom, bada bum, then boom. They went way, way up. Everybody's happy. Yep. Let's see. The Dow.
And we're almost at all-time highs in gold, and we're nowhere near all-time highs in silver, and it's kind of boring, and Bitcoin took all the show. There's a lot going.
Yeah, we have some interesting times ahead, but let me tell you, if it gets to 42,100.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Up over 500 points. Gold. Boop, bop, ba, bop, bam, boop. Hey, what was one of your top trends for 2024? $4 an ounce. As we go on the air, it's at $2,744. Up $700 since we made that forecast.
Before we show you more clips, smash the subscribe button.
A year. Yeah, that's fine. You know, you get the crap you want to get. Well, read the Wall Street Journal, $5 a day. That's fine. And what else? Oil. Oil's down. How come? Oh, because Trump. Yep. He just put his new energy policy in there. So it's drill, baby, drill. And the global economy is going down because when we get and looking at some of your top trends that we're writing about in your trends journal, confirmed. Germany is in dragflation. That's right. They're in recession and interest. Now because Trump is going to keep, drill, baby, drill. And it's going to keep putting you downward pressure. But again, they're the wild cards. And one of your wild cards is the Israel war. Yesterday, or excuse me, today, day one, or yesterday, Trump rolled back Biden's sanctions targeting the violent Israeli settlements. That's right. Rolled them back. China's in trouble. And so is much of the world. Again, Germany, the third largest economy, is in a recession. So these tariffs, the whole deal, we don't know what's going to happen. But again, you're seeing gold prices shine. Oh, and by the way, remember the dollar went up when Trump said he was going to impose these tariffs and all the things that he said he's going to do. 6 currencies went way, way down, and now it's the reverse. The dollar is weakening again, and that's why gold prices are going up. And you're seeing treasury yields going down too. Again, it's a Trump card, and it's a wild card. We don't know where it's going to go or how bad it's going to be. And again, China says its economy grew 5% last year. But we have the data to show that that's a lot of BS too. And they have a real problem that they're not going to solve easily. Yep. And the job losses and the businesses that are going out of business that are barely being reported. So we have a very, very, very tough time ahead. And it looks like the strength is going to stay in Bitcoin and gold as the gamblers keep gambling, because it's going to be a rough road ahead. Nobody knows where it's going to lead. Again, we stick by our forecast as well. The worse the economy does, the lower, if they go down the stock market, the lower interest rates are going to go. And again, you go back to the facts. In December 2008, the Dow had its worst December since the Great Depression, 1931. What did Trump do? He forced Jerome Powell to lower interest rates, which he did in January 2019. And on the gold side, first year Trump got in, 2017, gold prices went up 13%. Yeah. But on the Biden, it was a much better time. They went up over 27% last year. What in the world is going on? Bitcoin. $106,000 per coin. Yep. And again, as you well know, we've been bullish on Bitcoin. We're not the first to do it, but we only started in 2017 to become bullish on it. And you can see where it's going. And again, if Bitcoin wasn't there, you would see gold at a much higher level. And talking about Trump backtracking, oh, the tariff deal? Let's go back. On 5 November 2024, that's after he won the election to the White House, Trump said, on January 20th, as one of my first executive orders, I will sign all necessary documents to charge Mexico and Canada a 25% tariff on all products coming into the United States. And its ridiculous open borders. As a result of that, by the way, the dollar went up sharply. Yep. It hit like a 5-year high against, a number of currencies. Like the Canadian dollar went down to a 5-year low. And then what happened? Changed his mind. Now he's going to talk about coming back in February. Well, we're going to do it in February. But you said you were going to do it then. And what else? Oh, how about this? Go back. Trump said if elected, he'll end the Ukraine war in 24 hours after he takes office. Now it's 100 days, 6 months. Again, we don't know where this is going to go. It's a wild card, and that's one of your top trends. The Trump card. We don't know how it's going to be played. Canada says that if they get hit with these tariffs, they're going to retaliate. We don't know where it's going to go.
Going on underneath the surface was the largest weekly registered gold inflow ever on the COMEX. It's rivaled only by the March 2020 lockdowns. That is why gold open interest has increased by 130,000 contracts over the course of January. This does not count the spot deliveries that have happened in January, which is not an active delivery month, but still there are record amounts of deliveries for an inactive month in the gold futures market. There's never been a month like this. Something big is boiling. It's definitely going to happen this year. We're already on trajectory for it. We have is the second biggest month of COMEX registered gold inflows ever. This bar here, this blue bar, shows the monthly increase in registered supplies. Registered, of course, is gold for delivery against contracts, meaning it's for sale against futures contracts. Eligible gold is not. It is privately owned. Both are increasing. Registered gold even faster, which means that whoever is importing this gold expects to deliver it into a contract. Otherwise, they would remove the warrant from it. So we have here, it looks about to be between 0 and 5 million. So that's about 2.5 million ounces. That was only bested by, I think this is May or June 2020, when we had just below 5 million ounces, but this is the second biggest importation of registered gold supplies ever. And if we go to the weekly charts, we can see that this week was just about 2 million, just below 2 million ounces. This is pretty nuts. 2 million ounces of gold. And it touched that barely in one of the months of 2020. This could be maybe May, somewhere around April or May of 2020. I don't know which one is bigger, this one or that one, because the resolution is not big enough for me to tell. But you know what? It doesn't really matter. This week, what is happening is that this is a tariff dodge. Gold importers are trying to get away from the tariffs of the Trump administration, which will tariff everything that comes to the country, probably including gold bullion, but that has not been enacted yet. So these traders are trying to import, whoever they are, they're trying to import gold before the tariffs come into effect. And that is creating record amounts of gold importation, physical gold importation into the COMEX. If we go to this slide over here, this shows 133,000 new contracts in January. on the COMEX. See here in the 2025 begins, we're at about 450,000. Right now we're at 571,387. So that's about 133,000 new contracts. And this does not include the deliveries that have already been made. And I'll show you that in the next slide. My point here is that we usually see after a surge in open interest like this in gold, the open interest falls down. As it falls down, what happens is that price falls with it. I don't think that's going to happen this time because these increases in open interest are probably also tariff dodgers that are trying to get physical gold before the tariffs come in. And you know what? Those that open the contracts, they don't have to pay the tariff. The ones that import the gold have to pay the tariff. So I think people are importing gold into the COMEX in order to fulfill delivery on these contracts. So as the open interest on this falls, I think these deliveries are going to be made and it's not going to affect the price. What affects the price as open interest falls is that longs sell their positions rather than taking physical delivery. And because they sell their positions, the dollar price moves. But on delivery, the dollar price does not move. The contract is satisfied by gold being delivered. So I don't think that that open interest falling is going to affect price negatively here. And if we move to the next slide here, we can see the monthly deliveries. This is 15,642. Isolated, this doesn't look like anything special, but this is a non-active delivery month. So 15,642 deliveries is a record, all-time record for gold deliveries in a non-active delivery month, right? There's active delivery months. They happen like every 2 or 3 months. It's usually like December and then March or April. I think June is a popular one, but this is a non-active delivery month. So open interest is usually small. This is the most deliveries ever made for a non-active delivery month, which means that importers are trying to take delivery now, and they want to do this before the tariffs kick in. Now we're going to compare this with the open interest situation in gold during the 2020 crisis, the lockdown crisis. What happened here is we had near record high open interest, and then it slammed down from about 750,000 to 450,000. Let's just say 300,000 contracts, whatever that is. It's not exactly that, but it was a huge fall in open interest, and that was the gold crash that we all remember. And price went down from about 1,700 to 1,450. Price went down from about $1,700 to $1,450, somewhere around there. And we had this huge smash in open interest. We also had record deliveries. Now you could say, well, maybe that's going to happen this time. We're going to have a smash in open interest and a smash in the price and record gold deliveries. However, back then there was a huge dollar crisis, a dollar panic, because the world was shutting down and people couldn't service their dollar debts. That's not happening this time. We're not quite in a dollar crunch yet. So that means that there's not a rush for dollars. There's just a rush for gold before tariffs get in the way. And so as open interest falls here, as deliveries are taken for the active month, which closes in about 8 business days, 7 business days, 6 business days, something like that. January 30th is the last day. And open interest is still about 250,000 contracts. So I think that as we've seen record deliveries for a non-active delivery month, we're going to see record deliveries, I hope, in an active delivery month in all time. I think the record is 55,000 warrants delivered. I think it's going to be more if people are really trying to get around tariffs for gold importation.
40,000, 30 trillion, whatever that number is. At that point, everybody will be quite clear that that government debt-based money has absolutely zero value. We're going to see a lot more inflation this year and a lot faster. So I think that there is a level of hopium that's out there right now that President Trump can holding it together is the confidence of the public. So if something happens and that hopium is destroyed, then I think we're headed into that hyperinflation will become apparent to everybody, because I'm certain it's already started. Now look, it's really easy to determine what the true fundamental value of gold is. I am not expecting Wall Street to tell me that revaluation, it will happen 100%. I'm not even a teeny weeny bit doubtful of what that future is. What I don't know is what that would be in terms of dollars, let's say, by the time they do that revaluation. But that revaluation will be because the government is attempting to get that confidence back. So that means that inflation has really risen very visibly higher, maybe even to, 50 or 100% or wherever it's going to be at that time. And so they'll lop off a whole bunch of zeros. And I can tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000 by the time they do it. And I know this sounds outrageous to people because they get blinded by the numbers, right? But if you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too. So it could be 3 trillion, it could be 100 trillion. I personally have a $10 trillion Zimbabwe note, so I am a trillionaire in Zimbabwe. But what does it mean? It means nothing. So if they did the overnight revaluation today on a 1-for-1 debt for gold ratio, then it would be north of 40,000. Why not? Yeah. Right? But the way that I get it is, since the gold is money, it's sound money. The dollars are based on any fiat currency right today is based on debt. So you just take however much debt they're admitting to. Now, where Andy is going could also be all the derivatives. So all of those bets on the debt. So this, when I'm talking about above 40, I'm not considering that. I'm just taking all the debt that they've admitted to and dividing it by every bit of gold that exists. In the ground, above ground, doesn't matter, right? So, we have some interesting times ahead, but let me tell you, if it gets to 42,000, 140,000, 30 trillion, whatever that number is, at that point, everybody will be quite clear that government debt-based money has absolutely zero value. Can access it. FRED, purchasing power of the consumer dollar, and look on the bottom of that scale and it has a big fat zero. That's the true value. So if you can only convert into that, then that's the real trend. It's not the cryptocurrencies or the stock market or anything else or the meme stocks going up. It's to hide the fact that the purchasing power is virtually gone. Well, a lot of people that aren't just speculating on cryptocurrencies, but moving in that direction are trying to find something that is outside of the government's control, outside of the central bank's control. And so it's a very similar kind of head. I mean, that's why you buy gold and silver, because you want to basically be outside of the government and the central bank's control, which is a very good place to be. So, I mean, imagine how much gold would have been purchased in the beginning, because Bitcoin came out in January of 2009, quantitative easing. So this massive free money printing started in March of 2009. But the reason why you're seeing that is because it's a similar head. But I'm not convinced yet that cryptocurrencies are actually outside of the ability of the government to shut it down. I mean, TikTok went away and it came right back. Isn't that interesting? We have to look at that a little bit more. But if it's online, then there's a lot of subjective things that can happen with it. But it's the same kind of process. Those people that are buying cryptocurrencies to be outside of the government and the central bank control are the same kind of thought that a cryptocurrency, first of all, if it is Bitcoin or something that you can't actually convert into gold, then that's proper diversification if you want to be well diversified. If you're going to have your Bitcoin